The broader crypto market has lost more than $1 trillion in market cap over the last 6 months. This reflects, of course, a larger sell-off in risk assets, including stocks, tech stocks in particular. What are the key factors that investors need to be watching out for right now when it comes to the macroeconomic landscape, as well as the biggest news driving the crypto markets today? Well, we're here talking to two experts in the field who are very much in tune with the crypto space. They are the Arnold brothers, Aaron and Austin Arnold from Altcoin Daily, one of the world's largest crypto channels on YouTube with more than 1 million subscribers. Amazing work you guys do, Aaron and Austin. I'm a big fan of your work. I've been following you guys for a long time. Very happy to bring you on the show today. Welcome to Kitco.
Thank you, David. Honored to be here. Big fans of your work as well. Such a quality channel. Thank you for inviting us.
Appreciate it. That means a lot. You guys, if you haven't checked out Altcoin Daily, be sure to give them a like and subscribe on their channel. A lot of great stuff coming out of their channel. They do a lot of snippets of news and the most important drivers of the crypto markets today. So be sure to check them out. Now let's talk about the biggest news driving the crypto markets today. It's not just a price action, guys. It's what I like to call the Lehman event of the crypto market. It's not, of course, not as severe. We're not going to see a collapse of the entire financial markets, hopefully, the system, hopefully. But first we had Luna, Terra collapse. Celsius had liquidity problems. 3AC we'll talk about. BlockFi seems to be next. So let's narrow it down. 3AC is a huge, let's start with 3AC. They are a huge cryptocurrency fund. They've been experiencing losses, obviously. And just yesterday, news came out that they defaulted on more than $670 million in their loans. What can you tell us more about the story? What are they going to do next? Is this going to have a spillover effect on other funds in the space?
Extremely volatile time.
Can we introduce, let's introduce yourselves to the audience first, just so the audience knows which one's which, because you are twins. Aaron and Austin Arnold. Aaron is on the blue shirt, correct? And
that's right.
And Austin is the gray shirt. So Austin, go ahead.
Yes. Introduce ourselves.
Please. Yeah, please. Yeah, please tell us a little bit about your channel, a little bit about the work that you've done, and for those who haven't followed Altcoin Daily, those who have been living under a rock, what is your channel all about?
Sure, I'll give you a brief introduction. My name's Aaron, my brother's Austin. We started our YouTube channel Altcoin Daily in the very beginning of 2018. Perhaps maybe some say the worst time ever to start a cryptocurrency YouTube channel, because just as we were getting interested and trying to cultivate an audience, people were leaving the market in droves because it was right at the beginning of the last bear market, actually similar to where we are today. So how we got started in crypto, what you need to understand is, Bitcoin's first 10 years, there wasn't a lot of regular people in crypto. It wasn't being covered by the mainstream media like it is now. It wasn't being covered by independent media like it is now. And most people in crypto at that time were tech type people, were finance type people. It was about early 2017 when I started getting more heavy into crypto. I just broke up with an ex-girlfriend, or we broke up. She broke up with me. And all of a sudden I had more free time. And, I wanted to, get involved in a hobby, heard about crypto. Friends started talking to me about it. Near the end of 2017, Uber drivers started talking to me about it. And I started trying to trade crypto to make some money. Then in late 2017 as well, I discovered cryptocurrency YouTube. And there are a lot of great cryptocurrency YouTubers. Some still were around back then, some still here today. And, in my opinion, there were some subpar cryptocurrency YouTubers. And I didn't realize this at the time, but it was near the top of the cryptocurrency market last cycle. And they were just getting tons and tons of views, some great content, but some I thought, man, it leaves me wanting more of this content they're putting out. And I thought, well, surely, we can provide value like I would want to see. I would want to get this cryptocurrency information. Surely we could do that. And, as I mentioned near the top of this question, we don't come from traditional finance. We don't come from traditional tech. And so what we geared our channel to was the everyman, just like us, the regular person. If Bitcoin is for everybody, if cryptocurrency is the future, surely we could figure it out and provide value, try and keep things neutral, news, perspective, analysis. And we've cultivated an audience of people similar to ourselves, some whales, some minnows, some rich people, traditional finance people, some just regular people trying to get by and, extremely passionate about it and providing value.
Austin, I'm just curious, who actually came up with the idea of starting the channel first? Was it you?
You know, the reason I let Aaron tee it off, because he started the channel, did it for several weeks, and then invited me in after.
All right. Well, you guys.
And I'll always have that.
Yeah, yeah. You guys do a fantastic job. We don't often see your face. It's not in every video, but we hear you narrating your videos. Anyway, going back to my original question about 3AC. So big solvency issue happening there. Give us a rundown on that case in particular.
I mean, essentially all this started with the collapse of Luna, and usually, you know, in every bear cycle, which, you know, Bitcoin has crashed and resurfaced stronger over and over and over again in its 12, now maybe 13-year history.
Yeah.
This year, this was sort of some of like maybe the biggest instances thus far. Some of these, you know, 3AC was considered a blue chip hedge fund in the space. Luna, very new, only a few years old, was considered, you know, one of the more promising projects, but it just, one, it goes to show you how much more mainstream crypto is getting, how much bigger it's getting. But two, you know, this did start a sort of contagion effect, and it has affected many, many, many people. I don't know the inner workings of these companies. We're all waiting and watching and commenting as more information comes out. I think this is a great reminder of the reason Bitcoin and cryptocurrency was invented in the first place. You hear Bitcoiners say, not your keys, not your coins, because what this revolution is self-sovereignty for your funds. Meaning in the digital age, for the first time ever, you could actually own and control your assets. Before, if it was tech, you know, the big tech companies like Amazon and Facebook had to do it. With finance, you would trust your bank to do it. Now, from everything we're seeing, you know, compared to 10 years ago versus what the world may be like 10 years later, people are losing trust in big tech. They're losing trust in these governments, and they want more ownership of their funds. So it's not bad if you want to give up your keys, give up your coins. The revolution is, as long as you know the details and know the specifics of the situation. The average grandma may not care about that, but the important thing is now you have the choice for that self-sovereignty.
Yeah, and I just want to add, you know, the reason why the 3-Arrow Capital insolvency, you know, possible, you know, and the reason that shook the market so much is because they were highly respected. A lot of people saw 3-Arrow Capital as people smarter than the rest of the market, almost too big to fail. And then just generally, when it comes to actually buying and selling, a lot of times, whether we're talking about Celsius, 3-Arrow Capital, or Luna, when these companies need money, whether they face a margin call or they're just insolvent in general, they need to sell their holdings to cover those costs. And a lot of times, you know, the most liquid assets in crypto is Bitcoin and Ethereum. And with Celsius selling, 3-Arrow Capital selling, obviously Luna selling, that contributed all to the sell pressure we saw to take Bitcoin down to, I believe it was around 17,000.
Yeah. Well, we're going to talk about regulations in just a bit, but going back to self-sovereignty, I had this discussion with a friend the other day. It appears that every time things are going well, when we're in a bull market, everyone wants self-sovereignty. Everyone wants the governments to lay off and, you know, get hands off with what we do with our money. But now that things are kind of blowing up, everyone wants regulation and people to step in and kind of protect us from downside risk. I wanted to circle back to lenders now. Of course, you're right. We do want self-sovereignty, but a lot of people are losing trust in not just the government, but also the lenders right now with what's happening with Celsius. And I'm reading on Telegram, people are withdrawing from BlockFi. They're worried that their money is going to end up in the same predicament as the Celsius lenders. Just for a bit of background, the Celsius, one of the world's largest blockchain lenders and asset management firms, has recently, due to liquidity issues, frozen assets and withdrawals on their platform. BlockFi is another example of people starting to worry about the same thing happening on BlockFi. So contagion effect, we're definitely seeing that. What's next? What do you think? Help us speculate here.
The next one, that's the $1 million question, right? To back up a little bit, I just want to say that, you know, for people unaware, how Celsius works is it's traditional financial services for the cryptocurrency industry. Back in the day, we didn't have this type of stuff. Over the past several years, we've seen this stuff come into crypto. And the way it works is it's lending and borrowing. People give their money to Celsius or BlockFi or whoever. They lend that money out, generate a yield on it, and the customer gets the majority of that yield, and Celsius keeps a percentage, and that's how they make money. Now, who's next? I mean, that's the question. Austin, you have any thoughts on that?
Yeah, I mean, the short answer is ultimately, I don't know what the price of Bitcoin's going to do tomorrow. Neither do you, nor do I know the inner workings of these companies, this company. But when it comes to the value proposition of Bitcoin in general, the value prop hasn't changed, meaning that Bitcoin is still a decentralized, permissionless, immutable, hard capped supply money. And in these times of uncertainty and bear markets, I know it does affect a lot of people, but in a sense, the market was flush with highly speculative, very hypey things. And in bear markets, we always see the hype get flushed out and the more quality projects push through.
I just want to say real quick that, I think one of the biggest problems with Celsius and why it's so devastating for the whole market is that a lot of people thought of generating that yield and getting 10%, 15% for their stable coins, for their Bitcoin. A lot of people thought of that as risk-free or very low risk. And perhaps the cryptocurrency market didn't do a great job. Perhaps the companies didn't do a great job of actually explaining this is not free money, there is risk. And then what the user has to consider is the 10% worth it? Should I be managing my money more closely, managing my risk more closely? Or am I just going to hold my own keys and never have to worry about that? And it's worth being said, a lot of the blue chip DeFi protocols, the Aves, the compounds, the ones that do lending and borrowing, they remain solvent. They're okay. They're not going under. And with those protocols, you can keep control of your keys. Now to answer what's next, David, I wish I could give you an answer. Bitcoin maximalists will say it's Ethereum or maybe the blue chips in DeFi. I can't say what's next. Celsius and Luna, those are huge. BlockFi is having some trouble. I think they'll be okay. Yeah. I obviously have no idea, but who knows?
Let me offer a speculation, a worst case scenario, if you want to call it that, and I'd like you guys to comment on this. Of course, this is not necessarily going to happen. This is my own personal speculation of what could possibly be next. Now, we could have a run on the banks when it comes to crypto assets, similar to what happened with Celsius. If other lenders, Nexo, BlockFi, let's suppose they do something similar, which is to freeze assets, well, a lot of people can't access their money. That's capital that can't be reinvested elsewhere. So we're going to see other risk assets potentially fall down even more if capital can't be deployed there. If capital can't be withdrawn because everyone's scared that they can't get their money back, well, a run in the banks would mean a sell-off, a larger, broader sell-off, meaning that we haven't even seen the end of this crypto sell-off yet. What do you guys think?
I think, every other time in bear markets in Bitcoin history, Bitcoin has dropped 85, 90%. The altcoins have dropped either 95, some over 100% or to 100%. And right now, we haven't seen that yet. So if we drop lower, that would just be par for the course in Bitcoin terms. Ultimately, I think, the people that do have cash on hand, when there is blood on the streets, smart money is buying. And for example, we've seen that with FTX, giving a loan to BlockFi and taking part ownership in that company is the paperwork thus far. I don't know if they've signed, but we do see smart money taking out their positions when there is this fear, like we've seen so many times before.
Mm-hmm. An unwinding of leverage, like you mentioned, and just, bank run, fear, uncertainty, and doubt running through the market, definitely possible. I think there is an argument to be made that what we've seen thus far with Luna, with Celsius, with 3 Arrow Capital, not to mention the macro backdrop, the Federal Reserve aggressive action to curb inflation, the sentiment in general, all this stuff happening so quickly, caused Bitcoin to fall far and fast soon. There is an argument to be made that the lows could be in. Of course, nobody knows. Just generally what I'm doing, I certainly think that I have a long-term outlook for Bitcoin and even Ethereum, those two specifically. I think we're closer to the lows now and in 3 to 4 years we'll be a lot higher. But, bear markets are usually marked either with a lot of pain when it comes to downwards price action or pain when it comes to just time staying at the lows. So even if the lows are in, we could have a lot of time just ranging.
Chamath Palihapitiya, I believe you covered him in one of your recent videos. He said in a recent media appearance that, or one of his vlogs rather, that he believes that there's more downside risk that the collapse isn't over yet. You've touched on this, but can you maybe expand on his views a little bit and why you may agree or disagree with him?
Yeah, Chamath, billionaire in the space. The subscribers of Altcoin Daily saw this video a few days ago. And one, he has been a long-term believer in Bitcoin, bought a whole long time ago. But his main viewpoint is that inflation is not going away. Yes, the Federal Reserve has raised rates aggressively and fast thus far. Inflation is not stopping because rent is only going up. Delayed metric prices of other assets aren't being capped yet. And because of that, the Fed has always been the primary driver, if they choose to raise rates this aggressively, of bringing markets down. So I think he's just commenting on that. He has seen this time and time again in the financial history of the US. And based on the rhetoric that Jerome Powell is saying, that if rates continue to go higher, markets will be brought down lower.
Okay. I'm just curious as to why Bitcoin and the altcoin market at large have been responding negatively to rate hikes. I mean, I can understand tech stocks, I can understand traditional equities, but when you think about it, Bitcoin fundamentally, philosophically speaking, is supposed to protect you against long-term inflation. It's supposed to protect you against government risk and potential default in other risk assets. It's supposed to protect you from rising interest rates and economic contraction. It's supposed to store your wealth. Yet it doesn't seem to be doing that. It's just trading with the NASDAQ in terms of its correlation. Am I just wrong here? Am I just wrong to assume it's supposed to do all these things, guys?
You're not wrong, David. In order to understand why we're here right now and why Bitcoin is going down in 2022, I think it's important to understand, some of the reasons that caused Bitcoin to rise in 2020 and 2021. And I would say that it was because of inflation, that in March 2020, tons of money got printed. You can say since Bitcoin's birth in 2008, 2009 with the quantitative easing, the value, the purchasing power of a dollar has been decreasing, but particularly in 2020 when Bitcoin's bull market started and throughout 2021, and all investable assets seemingly went up. So I think Bitcoin did increase because of inflation. So now when the Fed is being aggressive with their monetary policy, trying to get more responsible, now we're seeing, Bitcoin, being less valued. That's what I would say.
Okay. Also, the thing to realize is the value prop of Bitcoin is it's a decorrelated hedge asset, and that is the hope. But two things. Right. One, the crypto market is so new in general that when large whales make waves, obviously that's going to create a huge tide or wave on the ocean. We are still new. That's the opportunity. That's also the risk. But also everything is correlated to everything in the short term. For example, in 2008, the crash, we saw gold correct along with everything else. Now it was one of the first to recover as people look for that hedge asset. But short-term wise, I think everything is correlated.
Yeah, Aaron, go ahead.
And just to add one quick thing, what you said is true. That's how, Bitcoiners, want to think of Bitcoin. It's uncorrelated. It's a hedge. A lot of the people we saw come in 2020, 2021, 2022, these are not Bitcoiners. These are big hedge funds, big whales, big traditional finance people. And they think of Bitcoin similar maybe to like a tech stock or definitely like a risk asset. So when it becomes a risk off environment, they're making the decision to decrease their holdings and causing to the sell pressure.
I was having this discussion with a friend the other day, and his argument was that Bitcoin is actually less decentralized than some people might think. Well, it depends how you define decentralized, but think about it. If you buy an Amazon stock or an Apple stock, companies typically have covenants against how much ownership you're allowed. You're not allowed to own more than 40% of the shares outstanding, for example. I'm just making that number up, but there's usually a covenant against having a majority stakeholder outside of the company. Now, Bitcoin has no such covenant. In theory, you could have a few whales dominate the entire market, and then when they sell, we, the little guys, are at the whims of the big whales, right? How is that decentralized? Can you comment on that?
Bitcoin is the most decentralized, the most censorship resistant asset we have, and our one shot, David, to truly separate money from state. And your points are valid. But for example, just from the use case of money, we're totally dependent on what the Fed chooses or chooses not to do every meeting, every year. They are in control of the market, how much money supplies in the system, is out of the system, as opposed to Bitcoin, controlled by the people. Nodes you can see publicly, tens of thousands of nodes distributed all over the world. that people are just believing in code, in just math. So with your Amazon example, yes, in the short term, these companies can set rules, and you know what? They can change those rules a year from now, a decade from now, whatever they want, as opposed to this hard capped asset that everybody has the same rules from day one and they're not changing.
Okay.
Yeah, and just Bitcoin's decentralization, such a big question because Bitcoin's decentralized in many different ways. And I would say with all cryptos, there's a spectrum of decentralization. And the fact that anybody can buy as much Bitcoin as they want, I mean, that's truly a free market. I mean, you can buy, why aren't people buying Bitcoin today like they were when Bitcoin is $50,000 and $60,000 is because they don't want to take that risk. But anybody's welcome to take that risk, and even more aggravating sometimes to hold as long as they want. Nobody knows what Bitcoin's going to do in the future, but they're taking that risk and they can buy as much as they want, hold as much as they want, sell as much as they want. And Bitcoin actually has the best Gini coefficient out of all the cryptocurrencies, meaning it's most distributed to as many different people. And Bitcoin just continues to get more distributed as people who hold sell when it's high, and people buy when it's low, or whatever it is. If you think Bitcoin's going to be around in 5 years from now, 10 years from now, 20 years from now, which I think out of all the cryptocurrencies, it has the best shot at that, just the way it's built, then it's anybody can take that risk.
Two-part question next. So I've heard the view that in order for the entire crypto market to bottom, you've called for a bottom in Ethereum and some other coins, but let's say their view is that if the entire crypto market were to bottom, we need to see 95% of the altcoins get wiped out to zero first, and then that's the definitive bottom. Obviously, that hasn't happened yet. So that's first part of the question. Do you agree with that view? Second, what is the part of the crypto space that you think has the most rebound potential now? Is it Bitcoin? Is it the big ones? Is it certain parts of altcoins with utilities that you like? So number one, is everything going to zero? Number two, what do you like right now in this rebound?
Great question. Here's the thing. Are things going to zero? No. I mean, these coins just stick around. A lot of them just crap coins. They're just zombie coins. They hold a slight market value, but they're not exactly at zero. But a lot of them, the worst ones, are down 90, 80, 99% from their all-time high, and particularly from their all-time high priced in Bitcoin.
Yeah.
The thing is that what do I think will cause like the next bull run? My worst case scenario is this for Bitcoin. Bitcoin's halving comes around in the middle of 2024. That's when the supply flow of Bitcoin gets cut in half. So if the demand just stays the same, theoretically, Bitcoin should go up. Plus, at the end of 2024, we're having another United States presidential election. I think sentiment will definitely change by then. So my worst case scenario is a year after that halving, 2025, Bitcoin breaks new all-time highs. That's my worst case scenario. I actually think in the more midterm, Ethereum is looking primed to, it could lead the next bull run in the next couple of years. Obviously, nobody knows, but Ethereum is going through a great change. And if it is successful, merging to proof of stake, I think that a lot of people have a lot of confidence in it, not to mention the tokenomics will be better. Ethereum recently, in the past year or so, implemented a change called EIP 1559, which means as the more Ethereum the network uses, the more Ethereum actually gets burnt. And when it transitions to proof of stake, that Ethereum also, you're in interest through staking your Ethereum as you secure the network. And actually, the amount of Ethereum that has got burned thus far for EIP 1559, and the merge hasn't even happened yet, the amount of Ethereum that's got burned, taken away forever as far as supply goes, is more so than the amount of Bitcoin that Michael Saylor bought and has taken off the market, and the more Bitcoin than El Salvador, a nation state, has bought. And so if you think what Michael Saylor and El Salvador, if you think that's bullish for Bitcoin as far as supply and demand, Ethereum's tokenomics are arguably just as bullish or more bullish. Now, obviously, there's a little bit more risk. Ethereum is going through a major protocol change. I think things are going to go well, but I think it's possible that Ethereum post-merge, and as people continue opting into Ethereum layer 2, I think that has the possibility of leading.
Austin, do you like anything besides Ethereum right now, or are you in the same camp that Ethereum is the number one and potential coin for a rebound here?
Ethereum is my number one altcoin holding. I'm a little more risk-averse investor, so I like the most decentralized, the most censorship-resistant protocols. Ethereum coming in at number 2. I would say that for just this year, specifically in 2022, I'm still betting on Bitcoin big. Usually in bull markets, it works out better if you bet on altcoins. In bear markets, you want to bet on Bitcoin. My view is because of the macro uncertainty globally, whether Bitcoin trends up, trends sideways, or trends down for the rest of the year, I think Bitcoin dominance is going to continue going up like we've seen in all the bear markets before. So in the short term, I am still betting on Bitcoin.
Final question, I'll let you guys go. Oh, but yeah, please go ahead.
Well, I just wanted to add real quick in regards to your first question. What about these altcoins? Do 99% have to go to zero or just, dip 90%? Yes.
Actually, it's funny you brought that up. Well, it's funny we're talking about this. It's not just my friends. Like people like Bill Gates are saying that NFTs are worthless. Charlie Munger and Warren Buffett has famously said that if the entire supply of Bitcoin were offered to him, he wouldn't even buy it for $25. So a lot of people think that there's just no intrinsic value and that we're going to finally, the emperor has no clothes. We're going to see everything just go to zero, all the clothes stripped away. But yeah, to your point about does everything have to go to zero? Does it?
Well, I just want to say the reason why so much does have to go to zero is because it's so easy just to spin up a blockchain. It's so easy to spin up an altcoin. Right. And especially with the cheaper chains, Binance Smart Chain, Tron, whatever it is, it's not a lot of capital cost or effort cost to do that. So there's so much crap that just gets deployed in the market, whether it's scams, money grabs, or just bad ideas or just failed ideas. And that's why so much has to fail, especially the meme coins, especially just the copy clones. I do want to say, though, that each cycle that goes by, the market gets smarter, the teams get smarter, the money allocation going in, so much improves and stands on the shoulders of the coins that came before. We are seeing way more legitimate protocols actually gaining real usership that have a better product market fit. So we're seeing more and more better altcoins and blockchain technology protocols develop each cycle. But the fact that just so much crap comes into the market every year is why, that kind of stuff has to happen.
Okay. All right. Final segment, guys. We're going to talk about regulation for a little bit. You covered this in a recent video as well. I'm just going to read this headline from a CNN article published a couple of weeks ago. $1 billion has been lost in cryptocurrency scams since 2021, FTC warns. And you actually covered this in a recent video. Gary Gensler, SEC chair, has said that this is a highly speculative asset class. There's work to be done there on what's called stable coins. There's a lot of work to be done there to really protect the investing public. What do you think they're going to do next?
Here's the thing. For a little bit of context, what you have to understand is in Bitcoin's first 10 years, the government wasn't talking about Bitcoin and cryptocurrency. The mainstream media barely talking about it. If they did not have nice things to say. So people used to wonder, when PayPal comes in, when Wall Street comes in, when corporations come in, how will they feel about it? Will they ban it? And that's why Bitcoin always, the people building Bitcoin always built it. So it was the most censorship resistant, the best chance of standing up to the state. And now in the past few years, we've actually seen some positive regulations, I would argue. And the fact that they're regulating it in general, as opposed to banning it, means game on, means they're not going to ban it, game on. We can start doing things with it. And in the short term, like regulation might be, bad for the market, the prices. It might, scare or like cause some protocols to move offshore. But long-term regulation is really good, especially if you want that big money. And I do want to remind people that Bitcoin, cryptocurrency, it is a global phenomenon. A lot of people compare it to the internet in the 90s, the big tech boom of the 90s. That was primarily confined to accredited investors in the United States. Bitcoin, cryptocurrency is global. There are kids in Bangladesh buying coins. There are people all over the world building. If the US were to impose heavy regulations, it would not be good, since the US is so central to that, just the global tech and finance things in general. But ultimately, I think what we see is these projects just move offshore. Now, I don't think the US wants to do that. The fact that they're talking like this, I think they're going to have fair regulations as opposed to unfair regulations, because they don't want to lose that money. They don't want to, lose their being the tech giants of 2022 and beyond. I think what we're going to see is Bitcoin is safe. Everybody's clear on that. Bitcoin is not an unregistered security. People gladly say that who have power in regulatory bodies. A lot of people have mentioned Ethereum is not an unregistered security. Some people argue against that. I think enough people have said Ethereum is a commodity as well. I think what we're going to see is, these stable coins, these algorithmic stable coins that are really not backed by over collateralized assets, like perhaps better ones like Maker. People are just going to have to be careful, and the riskier projects are going to have to go away. But ultimately, I think it's good.
All right, Austin, anything to add?
Short, sweet. It's keep in mind that these Congress people, these regulators, aren't giving their comments on cryptocurrency because they're incredibly knowledgeable on the subject, although some are, but most people are commenting on the subject because they're forced to, because this industry is growing so fast and so big that so many people are asking their opinion, and there's a lack of education out there. So the primary thing is educate first, get a knowledge, and then I like some basic rules to prevent companies from lying to individuals. I like that. But any gatekeeping of just regular people, I think I'm not in favor of that. But making sure these bigger companies don't lie, all for it.
It just seems to me like everyone's trying to fight to regulate this space because it's so lucrative and it's growing so big. The CFTC recently announced that digital assets, cryptos, were part of the crypto markets would become commodities, so it would be under their purview, under their jurisdiction. But you're absolutely right. I mean, what happens next, anybody knows. We want some regulation, not too much. Finally, what's next for you guys? Your channel's growing so big. It's growing every single day. Are you just sticking with this channel? Are you spinning it off into another side channel? Like, what's next for you guys?
Yeah. Final thoughts for the Kitco audience. I just want to, echo what you said earlier, David. Huge fan of Kitco, huge fan of you.
Thank you.
I've been a subscriber for a long time, and, you come off so professional on the show. That's why I love it. Ask such good questions, but we actually met in Bitcoin 2022 at an after party, having a few beers. Guys, this guy's a fun guy at parties, just as professional, but a fun guy to talk to and have a beer with. I
think I was wearing a suit too. I'm not sure, but you guys were definitely more a party appropriate attire. But yeah, you guys are a lot of fun to party with. I was embarrassed to say I didn't recognize your faces at first, but as soon as you told me, because I don't see your faces on your show, you narrate it, but as soon as you guys told me who you work for, I was like, whoa.
Same with you. You just were in our circle, and you were recognizable to me, but I couldn't pinpoint. Then you said, I was like, oh yeah. Anyways, like as far as what's next for us, you either want to be doing something totally different in the future, or you want to get bigger and better. And we want to continue getting bigger and better. This is not the end for cryptocurrency, at least not the way that we see it. I believe this isn't a 1 or 2 year thing. This is a decade thing. This is something that's going to affect the rest of our lives. Yes.
I think Austin, I think you told me in Miami, you guys worked briefly in the film industry. Is that correct? Is that something that you're looking to get back into in some way, or no?
Correct. And honestly, we never left. That's why we're in Los Angeles.
Oh, okay.
But, obviously the cryptocurrency blew up. The cryptocurrency channel blew up in the meantime. And now we do both. But you can catch us on Bitparts, on, some Fox shows. We're in a Lifetime movie, and we're also filmmaking out here in general. And the cool thing that I think the cryptocurrency audience will like is because of that connection, we do get some cool interviews on our channel. We just interviewed Spike Lee about his foray into cryptocurrency, filmmaker Kevin Smith of Clerks. We have the Michael Saylors that's coming up on Thursday. So we do the finance people too. But we are, always looking to merge those two worlds, and we're still doing both.
All right. Well, definitely you guys host a very, very quality channel with some great interviews. I definitely recommend you check it out. You guys should make a Bitcoin documentary. That's what you should do. I think that'll be a hit. I'd watch that.
I'd love to.
Yeah. All right. Well, Altcoin Daily is here with us today. Don't forget to like and subscribe their channel and check out the work. And of course, follow Kitco as well. Like and subscribe our channel. I'm David Lin. Thanks for joining me, Aaron and Austin. I'll see you guys next time.